And welcome to what we at Vertical Offense lovingly refer to as Day 2. Our first session is sponsored by Como Engineers and ANZ. Andrew Paterson is the Managing Director of WA-focused gold explorer Great Boulder Resources Ltd. Having joined Great Boulder in mid-2019, Andrew has nearly 30 years' experience in mining and exploration in WA and PNG. 2021 was a transformational year for the company, with a string of high-grade drilling intersections at the Sidewell Gold Project near Meekatharra, which is the main focus of Andrew's presentation. He joins us now. Welcome, Andrew.
Thank you. And it's great to have an opportunity to present what I think is one of the best gold stories in the junior section of the industry at the moment. And to put this into context, I was here 12 months ago. We had a 4-cent share price, market cap, I think at the time around 8 million. And as Jerry said, last year was a transformational year. Speaking to the audience here a year ago, we had some good ideas and some interesting projects, not a lot of data to frame those that potential. And during the course of 2021, we had consecutive discoveries at our Whiteheads project and Sidewell, and now Sidewell has rapidly become the flagship of the whole company, and that really is underpinning, I think, our value today and the potential that we see going forward. So given that time is limited, I'll mainly be talking about Sidewell, and I will refer people to our recent announcements and also to our website for information on the other projects. As you can see from the share price performance in the last 12 months, there was 2 significant step changes there. The first one in May being those 2 discoveries at Blue Poles at Whiteheads project and at Sidewell, where we hit some extremely high grades there. I think that was the first use of the word bonanza, so that was pretty exciting. And that was on consecutive days, so a couple of very busy days there for us. In terms of the board and management, I won't dwell on this too much. I think these faces are familiar to a lot of people in the room. And of course, having Greg Hall at the top is a very good, position for a junior company to be led by a guy like Greg Hall with his global experience is absolutely fantastic. But moving on to Sidewell. So going through the high level where, what, why, and the location is one of the major advantages of this project, apart from the fact that it's bloody big and high grade. So we think it's really ticking all the boxes. So it is literally right next door to Meekatharra. It's a 10-minute drive from our accommodation to the rig. And we're near the Bluebird Mill and Westgold's Central Murchison operations. We have a good relationship with those guys. We have Mika Gold to the north at Andy Well and now Sensor, who listed about a week ago with their T-Well project to the south. So there's a lot of activity in the Mika area, and we're pretty happy to be there. And the next question would be, why is it still there? And I'll talk about that in a minute. But first I want to talk about what it actually is. And the project itself is about 25 k's long. And this is all the drilling. We recently updated this, and you can see Mulga Bill sitting in the middle there. And, on the scale of that image being 25 kilometres from the top of the tenement to the bottom, Mulga Bill is huge. It's now 6 kilometres long. We put out an announcement this morning, which extended it by 1 kilometre. I'll talk about that a little bit in a second as well. But what that means is, the context would be size-wise, that would be from West Perth to the Raffles, or roughly, I suppose, Sydney CBD to Bondi Beach. It's a huge, huge prospect. And we've got a lot of work to do, but within that, we've already drilled some targeted RC drilling over about 1 kilometre. RC intersections up to 150 grams a tonne. Our best result of 14 metres at 36. These are really eye-catching numbers. It's a very complex system. We're still figuring out all the geometry. We still don't know exactly what's going on there, and we still can't classify exactly what sort of an ore body it is. but we know it's a big one. I've come out publicly and said we think there's more than 1 million ounces there, and that's what we've scoped our field activity towards. Zooming in on where we do have these high-grade hits, this is really the section we've done all the RC drilling so far. You can see some of the numbers there. And, you know, I think now we've used the word bonanza 3 times, and probably need to hold off on the hyperbole a little bit, but obviously I could report grades like that all day, every day, and I'd never get sick of it. So it really is ticking the boxes in terms of size, high grade, location. It's a pretty awesome project to have. Getting into the technical side, really it's a type of intrusive related gold system. What that means is we have bismuth as a really, really strong and widespread pathfinder element. The significance of bismuth, apart from its association with gold, is the fact that it's stable in the weathering profile. So we are dealing with a leached deep weathering profile. Bismuth stays behind in the weathered rock, so we can use that as a very reliable pathfinder and drill underneath it in the fresh rock, and we're finding gold pretty much all the time. The correlation there is fantastic. We're using Scott Halley extensively for advice on this project, and Scott's actually so excited about it. He's been working on it for free now for 12 months. That's pretty unusual. Scott is trying to retire, so he just can't keep away from this one, and we're very, very happy to have him on board. But talking to Scott about it, he said there are actually no analogues in the Archean in Western Australia. He's never seen an ore body like this in Western Australia. The way he described it, he said it would be more at home in the East Lachlan Fold Belt, or even in the Golden Quadrilateral in Romania. It's a very unusual system. It's like an intermediate sulfidation epithermal, high grades, which would typically be over some sort of porphyry at depth. We haven't seen that, but we've certainly seen plenty of these high grade vein structures. And this is the map that we put out this morning, and you can see that dot down the bottom. That's a kilometre past any previous drilling. That hole, an air core hole, finished in 24 gram dirt, and that's actually our second best air core hole in the whole project. And to put that into context, the best one was right up the north end where we drilled 14 metres at 36. That was under or next to a very high grade air core hole. So we'd be pretty happy to repeat that success. And we're now drilling the row of white dots on the bottom of the map. We've finished that fence, and we're actually just off the map a bit further to the south again, which would be about 8 kilometres by the time we finish that row of holes. Obviously, we don't have assays for them. They're still being submitted to the lab now, but it's just a really, really big and very exciting system. And you can see the contours on the map there are the bismuth runway, as we call it. So plenty of room there for more gold discoveries once we start infilling that air core with RC. We're using geophysics wherever possible. We've done a high resolution gravity survey. On this plan on the right here, that's the green shapes. We've got electromagnetic contours there, and they are coincident under some of the best bits of Mulga Bill. So we're still figuring out exactly why. We're still drilling. What that does present is this big kind of bullseye in the middle where we've got the dashed red lines and the question mark. That's a really big target. We don't have, actually we've just drilled 3 holes across the top of that. And we're just having a look at what that means, and we'll be drilling a diamond tail into that starting next week. Zooming in a little bit on that long section, this is a projection of RC intersection points. You can see immediately between the RC coverage and the middle of the geophysical bullseye, we've got 550 metres of strike there with no drilling so far. We've got air core above it, showing bismuth and gold in the base of the regolith. So very confident we're going to find more gold over that 550 metres. And there's another K.5 beyond that we have no RC drilling in the priority area alone. So absolutely, miles of real estate. A couple of cross sections here from areas that we have done a bit of drilling with. First one is on the north end, showing flat stacked high-grade veins, 39 grams a tonne up to 74 grams on that section. The one on the right is the geophysical target. As I said, we've just done the 3 holes across the top. We've got really widespread pyrite mineralisation, disseminated pyrite, which may explain the electrical signal. And that dashed line is the deep diamond tail that we'll be starting next week, which will go right through the middle of it, and then we'll know exactly what it means and where the gold is. So we would certainly anticipate or hope to hit some high grades in that diamond tail. Regionally, moving forward, this is going to be another real step change for Great Boulder in terms of our activity. So we're drilling diamond next week. We've got air core going for the rest of the month. RC will start in March. We'll do one more RC campaign, wait for those results, and then we'll be drilling continuously for the rest of the year. And that will step up into multi-rig programs in the second half of the year. So this is all aimed at defining Mulga Bill. Firstly, defining a mineral exploration target. Ideally, we'd like to be in a position to do that around July, August this year. That's a pretty ambitious target. We've got a lot of drilling to frame that target over such a big area. And then moving forward towards an initial mineral resource in about 12 months' time or towards the end of this year, ideally. As to whether we try and hang a mineral resource on the whole thing or whether we concentrate on 1 or 2 kilometres first, there's sort of the strategic questions we're dealing with at the moment. Obviously, that will inform our drilling decisions, but I think you'll see a lot more activity and commensurate news flow going forward. So it's going to be a very, very busy year. We're already ramping up the team. We've got one of our new employees in the audience here today. So, it's really good to see new people coming on board. Great Boulder getting bigger, and we're really going to transform this company. I think it's going to be a fantastic year to be part of Great Boulder, and we look forward to taking our shareholders along on that trip. Just as a side note, I've been in the industry for about 28 years, and this is the most exciting project I've been involved in. As a geologist and being in exploration, getting assays back on the email when there's plus 30 grams results in them, something you never get tired of. It's really the sort of thrill of the chase type thing for us geos. By far the most exciting project I've been involved in. So we're very, very lucky. Regionally, we're now moving the rig up to Jones Well, which is at the north end. Drilling some new anomalies there. Any hits we get up there will be brand new discoveries. Drilling our ironbark discovery that we found last year, and first effective drilling around Matilda. We tried drilling it last year, but the rig that we had wasn't up to the job. Also in the background, we're doing collaboration and research programs, collaboration with our neighbours, research with CSIRO, basically trying to get the best bang for our buck in any technical effort that we do. Moving on, our other projects, very briefly, Whiteheads near Kalgoorlie. Now, this is a really great project in its own right, but unfortunately, it's playing second fiddle to Sidewell for obvious reasons. But at Whiteheads, we have broad, coherent gold in soil anomalies, heaps of drilling targets. We made one small discovery there at Blue Poles, and that's supergene hosted mineralisation over about 450 metres of strike, moderate grade, and we think that's probably around 45 to 50,000 ounces. We haven't done a mineral resource on that, and we're just using that as a building block for the rest of the projects. There's a lot of potential along strike, and we're still working on that in the background moving forward. And then Wellington's a real sleeper. We identified this project 2 years ago and applied for it on the back of Rumble's work in April last year. And we're very open about the fact that we've closely followed what Rumble are doing, and we talked to them. They're a really smart bunch of guys. Our project is definitely not nearology, though. As you can see, it's about 100 kilometres away from Rumble and Strickland. But we really like what we're seeing there. We've got a fantastic geochemical anomaly, which is all based on geol survey regional data. And underneath that, we've got this huge northwesterly structure coming up from the greenstones at depth. And that'll be one of the key regional features for concentrating mineralizing fluids. So we're aiming to be active on the ground there in the second half of this year. I've told our native title lawyer that we want to have those tenements granted by the 1st of July. So that's his kind of target. And we're currently negotiating heritage agreement. So that's all moving forward quite nicely. Has taken a while, but to be honest, it does in that part of the world. And it's a very big area. That red polygon is about 60 kilometres from one side to the other. So it's going to take us a while to generate drill targets, but we would aim to be drilling there in 2023. So, the last question is why? I think at the moment, Great Boulder has a market cap of around 50 million. Obviously fluctuates a bit, as we all do in the market. I think I can honestly say I think that that's undervalued as we sit here today based on what we're seeing. The size of Mulgabill alone more than underpins that value, and that will grow significantly through this year from what we're seeing. All the indications are this is a very big system, very wide alteration. We haven't even seen the edges of the Mulgabill alteration system. That's how big it is, either east-west or north-south. It's really open in all directions. And as I said, Wellington, when that comes online, as you would have seen from the transformational experiences of Rumble, Zenith and Strickland, one good drill hole at Wellington could change things entirely. So a couple of really key things going on there, moving through 22 and into 23. So thank you. Appreciate the audience today. And as I said before, great time to be in GBR, and it's a pleasure to present the story. Thanks.
Thank you, Andrew. Just a reminder, ladies and gentlemen, we have about 200 people watching online this conference. Many of them, I suggest, are probably sitting in their jocks in comfort, but that's what you do when you're online and no one's watching you. Horizon Minerals is an advanced gold and critical metals explorer with assets in the Western Australian goldfield and central and North Queensland. The company holds over 1,100 square kilometres of tenure with 75 kilometres of Kalgoorlie, and is embarking on a large-scale new discovery exploration program in 2022, testing precious, base and energy metal targets. Managing Director John Price is a metallurgist and mineral economist with over 30 years experience in gold and advanced minerals. John, welcome to the program.
Thank you very much, and good morning, everybody, and thanks for taking the time to get an update on the Horizon Minerals story. The usual disclaimer, the presentation presented today is on the ASX platform and on our website at horizonminerals.com.au. So Horizon Minerals, Minerals Explorer, we've got an extremely large land package, all within 75-kilometre radius of Kalgoorlie, Boulder and the West Australian goldfields. Currently sitting with a gold resource around just under 1.2 million ounces. With a 20 million ounce silver resource with a high-grade core that's being worked on at our Nimbus project just to the east of Barara. And one of the world's largest, or 25% interest in, I should say, one of the world's largest oxide vanadium resources in central North Queensland. And I'll take a little bit through that and what our intent is with that project. $12 million in cash and listed investments. And while we've historically been focused on gold, some of the latest and initial results coming from our newer project areas have certainly highlighted a lot of potential for things other than gold. And I'll walk you through some of those project areas and what we're planning to do with them. Just on the corporate side, market cap currently sitting around 72, 73 million. As I said, we've got just under 4 million in cash and just over 8 million in listed investments. We have no debt, a very strong and locally focused board and management team. Ashok, those of you who don't know Ashok, there's probably no one in this room who doesn't know him. And Julian on the corporate finance side, Peter Bilby and Grant Hayward, open cut and underground mining engineers. Myself, humble metallurgist, presenting at an Explorers Conference, which is great. And Dave O'Farrell leading the exploration geology team with our office in Netherlands and also our office in Kalgoorlie, Boulder. So today I just wanted to walk through some of the new project areas that we've been focusing on, and they will be a focus in 22. 75,000 metres of drilling is planned for this calendar year. And we're just awaiting some final assays. It's probably not the first time you've heard this in this conference, but assay turnaround time is a challenge and will remain so. We've got about 6,000 metres of assays at the lab waiting for processing. We want to get those back to inform the next round of exploration drilling and targeting to get our best bang for buck. So 2021 was really focused on infill and extension to get our resource base into the M&I category. So 76% is currently in measured, indicated and JORC category. And we started our new discovery drilling at the back end of 2021 at the 4 key areas you can see on the map there. In red, our 100% owned tenure. On the left-hand side of the map, you can see the Yamani project area. On the other side of the super pit, the Greater Barara area, and immediately south, the Lakewood project area. So they're going to be a key number of areas for our more brown greenfields exploration activity in 22. Continuing our resource growth, infill and extension. And as we've done many times before since 2016, looking at monetising some of our smaller assets for cash flow generation. There's 1,100 square kilometres of tenure there, an extremely strategic package in and around Kalgoorlie. So moving on to Yamani, just north of Coolgardie, it's a 400 square kilometre package sitting on the Mount Ida Fault and the Reptile Shear Zone. We've spent 2020 since Grant working through a target generation study, a lot of geoscience, a lot of independent research to give us our targets and our higher priority targets. And we commenced drilling there in the back end of last year, and we'll be doing a fair bit more of it this year. So what we found is gold. We've sort of expected to find some gold, and we've had some really good early success on the gold side. But what we've also run into is a lot of nickel, cobalt, early days, but we're finding signatures within the ultramafics. And sort of as importantly, we've identified this extremely large 50-kilometre long pegmatite zone that runs straight up the tenement package. So early days, some of the initial results are extremely encouraging and quite exciting. So we're going to go and do this ground justice and give it the attention it deserves. And we're aiming to put at least 20,000 metres of drilling into this project, which has really been untested in a lot of areas. There's not even access tracks in a lot of these areas to get in and get the air core and the RC drilling up and away. So quite excited about the Yamani project area, and that is one of the 4 key areas for 22. The second, the Greater Barara area. Our attention now turns from our large gold resource of Barara and the silver project is to really be looking for the newer areas, the extensions from the north at Kanowna down to the south at Golden Ridge. Some of the drilling completed down at Golden Ridge. You can see some of the assays there, fantastic results. And we'll be following a lot of those up and looking to connect the Barara system with the Golden Ridge system to the south. You can see on the map there in the centre of the page. So great gold results. We're expecting a lot more good gold results as we continue the drilling program. Along with that, we have now identified a lot of opportunity for the silver zinc trend to continue. So the Nimbus area, you can see just north of '22. Further to the south and to the west of Golden Ridge, we're hitting highly magnetic ultramafic areas. We want to go and test those. There's certainly prospective for nickel sulfides. With our friends at Metal Hawk to our east that have the nickel rights over our Cannon property, we're certainly going to have a bit of a look for multi-commodities across this extremely large package and so close to Kalgoorlie, 15 minutes and you're there. Lakewood is early days, just to the south of the super pit. So there was a number of historic anomalies there that need to be followed up and tested. Seismic work, geochem, geophys work has been done and targeting. So we're looking at getting the air core rig out there again in 22 to start testing some of these high priority targets. and again, in an area that hasn't had a lot of exploration beyond gold in other commodities. So we're going to be we're doing all of that. Our Kestrel discovery from last year, you can see on the long section there, some fantastic discovery results in the northern section of Kestrel, and a big gap in between. So where do you think we're going to be drilling? You can see the dots. We're going to be going and looking to join these up along strike and particularly at depth at Kestrel. So some fantastic mineralisation, excellent continuity, good widths, good grade, and we'll be continuing work on Kestrel in 22. On the resource growth side, as I said, just under 1.2 million ounces of resource. We've got 76% of that in the measured and indicated category, 7 core projects. We'll be continuing to extend those. I think it's fair to say that the newer discovery drilling will be the lion's share of our planned drilling in 22, but we'll continue to extend. The vast majority of these resources are open along strike and particularly at depth where we see underground heading in the Kalgoorlie goldfields, getting underneath some of this stuff and tracking it underground, and particularly Cannon, Rose Hill and the Penny's Find area is certainly open, and we want to get testing beneath those and see how it continues at depth for underground mining. So a lot of opportunity on the resource growth side, and we want to be growing that resource over time. I think since 2016, we mined Teal open cut, generating cash using contract mining and toll milling. And then we deploy that cash back into the ground with our exploration and resource growth steps. So we've completed Teal successfully, we completed the Barara trial successfully, we put money in the bank, and then we put that money back to work. We'll continue that as we will continue our feasibility study. That work is continuing. We're aiming to have our ore reserves out in the current half, and then looking at all the different options that we have available to us in this climate. It's probably fair to say that CapEx and OpEx is a moving target when you're looking at estimating. So we need to be both pragmatic and flexible, and the location that we have around a lot of existing infrastructure gives us the opportunity to monetize higher grade, smaller projects. You can see on the picture there, that's the Cannon open pit, very successfully mined by Westgold and Southern Gold. There is a 4-level development underground sitting beneath that. It's designed, we should have reserves out on that in the next 3 to 4 weeks. And that's a great opportunity for us to again turn these things into money and then get that money to work for us, funding our exploration and resource growth programs. So we've done it before, we can do it again. We've got great relationships with the third-party toll milling guys and all of our neighbours in the Kalgoorlie region. Our listed investments are currently sitting around 9 million across about 5 or 6 different shareholdings, and we'll start to move some of that stock with the companies that we hold, and making sure that we don't do anything negative on their side, but moving some of that stock, turning it into cash and using that for funding over time as required. I want to spend a little bit of time on Vanadium. The project is a monster. I think the first reserve that we put out at the Lilyvale project is about 120 years of life, and that's just 1/10 of the area. It's a 1.8 billion tonne resource. What's different about the Richmond Julia Creek project, which you can see sits about halfway between Townsville and Mount Isa, is an oxide sediment ore. So it sits 5 metres below the surface, and it stops at around 15 metres below the surface because you want to stay away from the oil shale that sits below it. So you're talking about an extremely low strip ratio, strip mining exercise, concentration of the vanadium, which sits at about 0.4 to 0.5% in ground. We can concentrate that material at site with a relatively straightforward screening and flotation plant, and that'll get us to about 1.8 to 2% vanadium pentoxide con. And then we move to a very conventional downstream processing pathway, delivering the 98.5% vanadium pentoxide product, flake product. When we started work on this project, vanadium price was about $2.80 a pound. I think yesterday it hit $10.40 a pound. That supply crunch and that demand is not necessarily in the steel industry, which has been typically used as an additive for steel to increase its tensile strength. What we're seeing now is its potential for grid scale, renewable energy battery storage, load levelling, edge of grid issues, the ability to be off grid with renewable energy being stored in these large liquid state batteries. The technology of the batteries has come a long, long way. I think it's got a little bit of a ways to go. The Generation 4 batteries that we see in the market now are extremely competitive. We aren't competing, or vanadium doesn't compete with lithium. I see a future where our lithium-powered cars and our laptops and our phones go home and they get plugged into a vanadium battery that doesn't really run your house. It runs your suburb as a battery storage system on a very, very large scale. So the technology is getting better and better. If we're sitting on the lithium curve 6 or 7 years ago, if you don't know a lot about the vanadium space, I'd certainly encourage you to have a look at it. On our project at Richmond, what are we doing? Our intent at the moment is to spin our 25% out, join it up with our joint venture partner RVT, and list the project on the IPO in the next 5 to 6 months. For Horizon shareholders, that means shares to you through an in-specie distribution. That is our intent, to give back a percentage interest in the new project, and also preferred or preference in the IPO coming up in 5 to 6 months' time. So as a shareholder, you'll get exposure and participation and opportunity to be part of this world-class vanadium oxide project. The JV partners have done a fantastic job with progression of the PFS. That's out in the market. Have a read of it. CapEx and OpEx, when compared to the large titanomagnetites, it's about a third to a half of the cost in CapEx. And the operating cost in the PFS was about $5.60 a pound. So very, very good margin if we're producing, as we intend to, around in the PFS is around £30 million a year. Very, very significant project. And our plan is to give it its own life with a dedicated team, dedicated group. We're gold people in Kalgoorlie. So we want to put a dedicated team in place. The flow sheet is developed. The technology that was applied in the Hunan Research Institute in China has developed not only the cons plant, but the downstream processing flow sheet. So we are advancing through to bankable feasibility study in the next 12 months, and then moving through this project into a listing and into a development decision in 2023. Very, very exciting, and a new emerging energy metal, and technology is certainly getting better and better every day. On the Nimbus side, as I said, 20 million ounce resource. We've got a high-grade core here. The feasibility work on Nimbus will continue around that high-grade core. The key for us is concentrate generation, making a con silver zinc, and then getting offtake for that silver zinc. We'd like to be out looking for another couple of lenses. You can see some of the grades there, spectacular. The silver runs about 770 grams a tonne, and zinc's running around 13%. So we'd like to see a little bit more of that in tonnage, and then progress that through its feasibility study stage through 22 and 23. Even though we're a fairly junior company, we take our ESG responsibilities very seriously. We've started that journey. We've done our gap analysis, and we'll continue to work through that. And our aim is to publish our first sustainability report in 22. So there's a lot going on, and there's a lot of balls in the air. A lot of experience within the group, and with our joint venture partners at Richmond. A strong and growing gold resource. We've got a great opportunity to be exploring for multi-commodities in multiple new project areas, and that's going to be a big focus with our 75,000 metre program. Near-term cash generation potential. We've done it before. We're looking at doing it again. We can mine, we can mill, and we can turn it into cash and get that cash to work. A lot of opportunity around, and great exposure and optionality for our shareholders to be exposed to gold, silver, zinc, base metals, energy metals, and participation in Richmond. So with that, come and see us at the booth 83, and the guys can explain it further if there's interest. Thank you for your time.
Thank you, John. Getting a bit of reaction from people who are watching online, which is good. It's nice to know that they're participating. David Hutton is with Woomera Mining and Rimfire Pacific. He's watching. And who was the other one we had from? It was Chrissy. She said, tell Jerry I'm nude. Chrissy, I know, we can see you. Moving right along. Adam James is Exploration Manager with Nexus Minerals. Nexus is rapidly advancing its Wallbrook gold project in the eastern goldfields of WA. To tell us more, we're joined by Adam Janes. Welcome along, Adam.
Good morning, everyone. Thank you. And as introduced, I'm Exploration Manager for Nexus Minerals. Unfortunately, Andy Tudor couldn't make it this morning owing to quarantine requirements associated with travel. And talking about transformational success, 2021 was a great year for Nexus as we made what we consider to be a material new discovery at our Crusader and Templar prospect out at the Wallbrook project here in the Eastern Goldfields. And already now in 2022, we've made a lot of positive headway on the project. We've got a 48-man camp mobilized, operational. We've got multiple diamond rigs, multiple RC rigs turning. We've got our on-site technical facilities set up, commissioned, and we've got active strategies in place to build and retain human capital within the organization, which is a struggle at the moment. We've got our charter flight as well set up, supporting the operation. That's mitigating the risk of COVID entering the site, and we've got a management plan in place to try and protect our people and protect the operation so we can continue to push forwards up there. So there's been a lot of positive headway over the last 6 weeks, and it's a pleasure to take you through the project in a bit more detail. Disclaimer there for you. So looking at the company snapshot, and 289 million shares on issue at the moment for a share price of around 37 cents and a market cap just north of $100 million. And as I mentioned, last year was a great year and that share price really did very well. And a lot of the interest in the stock was actually driven by technical professionals who are familiar with the area and basically looking at the photos of the core from site and saying, you know, wow, what we're seeing here is analogous. It's so similar to the deposits that we see north and south of us. And they really recognized opportunity and value in Nexus. And that's just continued to build. So it's not a typical overnight success. It's been 8 years in the making. And it's a privilege to work on it. Current cash in the bank, $22 million, and confident with that and the operations at the moment, we're in the best possible position to really push forwards. Board and management team bringing over 100 years of industry experience. They're 100% committed to this project, as is the exploration team, and really making it the best it can be. So privileged to be part of that. Looking at our project, so in the Eastern Goldfields, we're looking for large-scale gold deposits. We've also picked up Bethanga, which is targeting copper-gold porphyry over in Victoria. And the majority of this presentation is going to be looking at Wallbrook project. That is where the majority of our exploration budget's going. But I will also just touch upon Bethanga. It's a great project, and we're really happy to have it onto the books. So looking at the Eastern Goldfields, and you see there our tenure, and that's really been a strategic movement into that belt over the last 8 years, where we've consolidated a meaningful tenement package there. And it's been a targeted exercise to really build a position in the Laverton belt. It's over 40 million ounces of gold discovered. And what's impressive about this belt is the level of opportunity. Whilst around mines themselves, obviously a lot of exploration and discoveries, but outside of those areas, there's still a lot of underexplored ground and a lot of opportunity to be had. So a great area to be in. Looking at our Wallbrook Gold project, you can see here, it's over 250 kilometer square tenement package, offering 50 kilometers of prospective strike. And this project is really ideally situated about 140 kilometers northeast of Kalgoorlie. And it's situated there in between the Carosue Dam operations, currently operated by Northern Star, and the Porphyry Mining Centre as well. And material at the moment is actually trucked past our doorstep from Porphyry Mining Centre straight down into the Karari mill, just down to the south of us. And you can see here that the light yellow colored rocks that underpin the majority of our project are the same, it's the same rock type that actually underpins the other economic deposits right next to us, being Porphyry Mining Centre and the Karari corridor down to the south. And really those altered volcaniclastics with the porphyry intrusives that have punched up through are really the key to the gold in this area. And so, as I said, that's where a lot of the interest has come, with people recognizing the opportunity here and really then getting followed up with success with the drill bit by our exploration team. And when you take it down to the key elements here, what we have is a big alteration footprint. We've got some great deep-seated structure, and we've got neurology to other economic deposits. And really the ingredients in combination with our exploration success is really driving the growth in Nexus at the moment. And there we have multi-million ounce gold district, over 4 million ounces discovered to the south of us by, well, Saracen, Northern Star. Certainly we're looking to grow on that ourselves and to replicate the success and build the company. So taking it into the Crusader Templar prospect, this is where we've had the majority of our success last year and where the majority of the exploration will be completed this year. And these two prospects initially were actually two separate prospects. And just through time and our regional exploration effort, what we've actually found is that that is 1.6 kilometer corridor, which we ultimately have these drill rigs on at the moment following up. And you can see there's some fantastic drill intercepts, 29 meters at 4.6, 30 meters at 5.17, really great intercepts. And it's showing the typical Eastern Goldfield style deposit where we've got a great supergene zone, 71 meters at 2.06 from 25 meters. And that's really transitioning into a higher grade core at depth. And you can see there 30 meters at 5.17, great numbers really underpinning this project. Now, we've recently had metallurgical test work back for the project, and you can see their recoveries, 98% in the oxide and fresh material, and low reagent use. We've got quick leach time, so really a big green tick for the project as well. And this is all on granted mining tenure as well. So that's some great elements as well, just supporting the story. And as said there, the host rock and the intrusive, the setting there, the geological setting, is synonymous with some of the other deposits around. So we're really happy that we're onto something that's quite meaningful. At the moment, you can see 30,000 meters of RC currently underway, really just tagging this deposit along that 1.6 kilometer corridor. And we're then going to come along and follow up with infill and some depth extension as we start to pull out the geometry and that kind of thing. Continuity at the moment has been fantastic. You can see there, this is a composite section through Crusader, the first 600 meters of strike. And really what's manifesting is a coherent footwall load and a coherent hanging wall load with the supergene mineralization close to surface. So some fantastic continuity there that's really supporting the project. And this is where it comes back to the right rocks. And the analogies we're drawing and supporting our exploration effort between what's been seen in the deposits near to us, Porphyry just to the north, Karasudam just to the south, and really that picture is just replicated in the holes we're drilling to date. And you can see there the red rocks where you've had those oxidizing fluids come through and just prime the whole system. And really happy to be working on this. Looking at our regional exploration, so whilst we have got our Templar Crusader prospect and we are focusing on developing that, what we want to do is continue to work on the exploration upside across the project, and we will be moving the RC rig across onto a couple of these targets through this the first 6 months of this year. And what we found is really when we deploy the geophysical methods, we've got our ground magnetics followed up by our high resolution gravity, where we're seeing our gravity low corridors and our mag destruct zones are really the areas of greatest potential. And that is, as you can see there, multiple targets already identified and certainly worthy of follow-up through this year. So here we have planned exploration activities. As I said, we'll be doing a bit more high resolution gravity and we will be following up with the RC drilling as well. And what this comes back to is a highly prospective tenement package, which is worthy of the exploration dollar. So moving across to Bethanga, and as I said, new onto the books, and I do want to just touch on it very quickly. Again, part of Nexus's strategy is really looking for areas where we've got most potential, looking for corridors where they're proven with opportunity. And that's what we're seeing here over at Bethanga, the same geological domain which hosts the Cadia deposit. And we're really grateful to have this on the books. We've already been across there. Andy Tudor was across there just earlier this week. And just starting to push the project forwards. And again, just comes back to the right rocks. The project was historically mined for copper, but very, very little exploration since the 1980s. So the fertility assessment that we've got undergoing there, we've completed already soil sampling. We've undertaken some geological mapping. We're working on the air mag and getting an interp sorted for that. Ground magnetics will be underway from middle of this year once we're sort of out of the fire season over there. And as said there, the option was exercised over the Christmas period, so now 100% Nexus, so great things. Looking at our exploration program, so this just gives you an idea of what we're expecting. Most of the exploration effort, obviously, at our Wallbrook gold project. Like everyone in the industry at the moment, we are suffering with lab turnaround times. We expect to have results out in March, and hopefully from then on in, they'll start to get a bit more continuous, particularly as we start to see the fruits of the labour from our drilling program up there at the moment. Bethanga, this fertility assessment underway, and as you can see there, the ground magnetic survey is planned. So pulling it all together, why invest in Nexus? We've got a highly prospective and strategic land holding. At the moment, our operations are really set up to be in the best possible position we could possibly be at this moment in time. Well funded, $22 million of cash in the bank, multiple drill rigs operating at the moment on Wallbrook project. We've got a highly skilled technical team who are committed to pushing the project forwards. Yeah, we're very much looking forward to seeing the fruits of that labour through this year, and really leveraging on the growth we saw last year. Over in Victoria, another great project, great to have it on the books. Again, the right rocks, great corridor, and yeah, we're looking forward to seeing what comes out of that project. Experienced management team who will be looking forward to supporting the exploration effort through this year. If you're of interest, please do come by and stop by the booth. I'd be happy to take you through the project in a bit more detail. Me and the exploration team are there, so please do stop by. Thank you very much.
Robert Tyson is the managing director of Peel Mining. Not a whole lot is known about Robert, but enough to make him the managing director and to be doing a good job for Peel Mining. You're over to you, mate.
Thanks, Jerry. Thanks to the sponsors and Vertical Event for putting on the conference again this year. It's amazing how well attended given circumstances, so congratulations. We've also got a booth here, so if you're interested to hear more, please drop by the booth after my presentation. We're a copper growth company, so we're one of very few companies on the ASX that have significant copper exposure. So look, we've been working for a long time to build this position of the company. So we've got some major resources in New South Wales, Cobar, which is the richest polymetallic part of the Lachlan Fold Belt in terms of base metals and precious metals. We've built a 3,000 kilometre plus land package over the last 12 years. Our resources are significant. We've got around 15 million tonnes, which we've put together from scratch over the journey that we've been there. But our priority is very much on copper. And so the Wirlong and Mallee Bull deposits, which constitute around 9 million tonnes at about 2% copper, are our focus. We're very close to the CSA mine, which is in play at the moment. And there was some news on it yesterday that they're down to the final bids on the table, I believe. And our aim is essentially to build a 10-year mine life at sort of 20,000 tonnes per annum copper production or better. We've got fantastic metallurgy, which is a common feature of copper in the Cobar Basin. So CSA's concentrates are renowned for being some of the highest quality in the world. And certainly we're seeing the same things with our mineralogy and concentrate products. And during the year just gone, we've been relentless in drilling out our resources to really get our deposits to a point where we can undertake significant study work. Some of those results we reported recently, but the copper results we've reported over the last year or so have been outstanding on the whole. Certainly that headline number, 58 metres at 5% copper, is a rare report these days. The top three are from Mallee Bull. The next three are from Wirlong, which is our budding copper discovery that is growing as we speak. So company overview, we've got about 400 million shares on issue, or 420 I should say, after around 15 years listed life. So we've kept our issued cap quite tight over the journey. End of December, we had just under $6 million cash. Hampton Hill and Associates, who are well regarded as value investors, are our number one shareholder. St Barbara Limited is on our register also, and Paradise Investments also there. Directors with plenty of skin in the game, and we certainly always chip in when we're passing the hat around for rights issues, etc., to the best of our ability. Board of directors, four-man board, Jim Simpson and myself, technical, certainly Graham Hardy and Simon Hadfield, terrific stewards with great commercial background over the journey, has served us very well to date. And Jim, mining engineer, so speaks to our aspirations to become a mining company. Copper, look, I won't go on about this for too long because I think most people understand the fundamentals. But in short, we're not replacing what we're consuming in a global sense. And the predictions are we're going to need a lot more than what we're using today over the decades ahead. So it's a metal that's got a great future and we're heavily exposed to it. So the South Cobar project, as I mentioned, we've got just over 3,000 square kilometres of tenure. We've made essentially 5 discoveries or rediscoveries since we've been there over a sort of a 10, 11-year period. And from beginning, when we started with 0 resources, we've built up over 15 million tonnes of resources. And that speaks to obviously the fertility of the rocks that we're looking at and the success rate of our exploration. Combined Wirlong and Mallee Bull resources, as I mentioned, just over 9 million tonnes at 2% copper. And Wirlong and Mallee Bull, we see huge upside in terms of what those deposits can turn into. Certainly Wirlong in the near term. We're very keen to get back into there and grow that resource because we see abundant opportunity. We also have some very strong zinc polymetallic type mineralisation at Southern Nights, around 6 million tonnes there as well. So essentially we've got our foot on some fantastic assets and they're all within cooee of one another. We also own 2 properties, around 32,000 acres of land in the Cobar Basin. We purchased one just before Christmas and that settlement's still to happen. But we've got our foot on the 2 key deposits of Wirlong and Mallee Bull by securing those Western land lease tenures. This is our track record, and they say the trend is your friend when it comes to investing, and certainly our resource growth is showing that starting from zero, and you can see when we arrived in Cobar back in 2010, we've been able to consistently build our resources, and in the process, particularly building our copper resources. So we've got about 180,000 tonnes contained copper within our resource base at the moment, within that 15 million tonnes of resources. But we certainly see the opportunity for this chart to keep moving in that direction. The Wirlong and Mallee Bull copper deposits at a resource level look like this. So just under 2.5 million tonnes at Wirlong today at just under 2.5% copper. It is one of Australia's highest grade, if not the highest grade, sort of pure copper deposit that isn't developed already. Obviously, CSA up the road runs at around 4% through the mill. Mallee Bull, about 2.6% copper equivalent at our last resource with about 6.8 million tonnes and about a 1.8% copper headline number there. Both of those deposits are open in all directions pretty much. And at Wirlong, we've been drilling there a lot over the last year, and we've got a large amount of copper intercepts that currently are excluded from our mineral resource estimate. So we see plenty of upside. So we believe our deposits are analogous to CSA. There's no question. They're Cobar style systems, hydrothermal breccia, very pure chalcopyrite mineralogy. But you tend to see these sorts of, I guess, signatures to these deposits, subvertical in nature, very similar structural settings in our deposits and certainly CSA, multiple stacked and usually subparallel lenses. And the grade of our deposits is certainly comparable also to what CSA started life as at around 2 to 3%. CSA initially took about 50 years to get about 200 metres, 200 to 300 metres below surface. In the 1950s and 60s, they started some exploration drilling and discovered hidden lodes that really has propelled the mine to where it is today. And it's consistently in the top 5 to 10 sort of high-grade copper mines in the world. And it was in the Australian yesterday that apparently a couple of well-known West Australian company, or one West Australian, one South Australian company, Oz and IGO, are in the final run to try to secure that asset. So we look forward to seeing the outcome. But they're certainly talking about $1 billion sort of plus for that asset. And it makes us wonder what ours are worth, to be honest. We think ours have every opportunity to turn into those sorts of deposits in the future. One of the great things, as I mentioned, about working in this part of the world is metallurgy, and particularly our copper deposits. They are amongst the best in the world. I was talking to our metallurgist yesterday, and he said it's pretty much as good as you get. We produce ultra sweet concentrates, really, the products, the test work that we've done today. So we see that we should be able to achieve plus 95% recoveries to plus 32% copper cons. So that's what the smelters want, very few impurities, if any, and we can get there simply and easily. It wants to float readily, and both deposits are like that. Mallee Bull has a hanging wall lode that's more pyritic, and the recoveries on that are slightly lower, but overall that project still delivers greater than 90% recoveries to around 30% copper con. The similarities in a structural sense, when we've reviewed our data and compared it to what's known about CSA, we see strong similarities, and the easiest place to look to see them for yourself is to just go into MinView in New South Wales system and look up the magnetic data, and you can see the same trends. So essentially you've got these basement tapping north-south structures. They're going deep and they're bringing up the hydrothermal fluids. And then you've got these cross-cutting structures, northwest, southeast, that essentially control the emplacement of high-grade mineralisation. And we see very strong similarities at both Mallee Bull and Wirlong to that structural setting that's at CSA. Wirlong, as I mentioned, 2.5 million tonnes at 2.4. It's under a 12,000 acre property that we purchased recently. The mineralisation remains open. We're looking south there from that drone photo. There's a bit of a hill there, so we haven't been able to test the up dip potential, but certainly in some of our drill holes, we see chalcocite and native copper. So we haven't been really able to test the main lens of that's been the target of our resource drilling in an up dip position because of the hillside. At some point we will do that, but we've been chasing the bigger picture there. The bigger picture is this, so you can see that growth fault, the Wallbrook fault, and then the transform fault cutting across John Owen. And where they coalesce is where essentially we're seeing some of the better mineralisation show up. We've been very focused on the main zone, which was a gravity anomaly that essentially took us there. We believe it's being caused by chloride alteration, iron rich, obviously. And but what you can see in that image is geochem surface sampling for copper, and we haven't tested some quite significant strike extent of this. And our structural geologist tells us that's where we need to head next to really test the strike extent of this system. That's a long section. There's a large buried magnetic anomaly. They're common features in the Cobar Basin associated with mineralized systems, usually pyrrhotite or magnetite. Again, we've just sort of touched the top of this magnetic anomaly, and it seems to be associated with the mineralization that we're seeing. And we see good potential, as I said, to expand that. The immediate growth opportunity is essentially highlighted by that balloon. All these mineral intercepts that pop up there are within that balloon, but not included in the existing mineral resource estimate. And we believe that'll constitute an upgrade to that resource, a readily achievable one. We also see some really broad intercepts, 205 metres at 1.4% copper within this drill hole just here. And that does make us wonder about the potential for a large-scale opportunity at Wirlong. Mallee Bull, we own the land there as well, 20,000 acres. It's a classic Cobar-style system, returned some beautiful drill results, assay results, just after Christmas. In the last couple of weeks, we've got them. So 58 metres at 5% copper, 37 at, I think there was one there, 37 at about 3.7. So we've had some terrific results from this deposit, but it's a chute-like system, and it remains open along strike and down plunge. We did some magnetic inversion modelling going back a number of years ago when we first discovered Mallee Bull. And there is a large magnetic anomaly that's sitting under the axial plane of the antiform that Mallee Bull sits on a fold hinge of. And we really don't know what's causing it. It's also got a coincident conductors down there. It's deep, but it offers obviously a very large scale opportunity. I'll race through our zinc and polymetallic deposits, but look, they're very good deposits, both of them. Mayday, we've only scratched the surface. It's an outcropping gold system, but it's a VMS, so polymetallic. But Southern Nights is a large-scale VMS system. So we've got just about 5 million tonnes there at around 7% combined lead zinc, or zinc lead, I should say. And the zinc price is obviously very, very strong, and we do like where it's headed. But this essentially back-ends any development scenarios as we progress to it. That's what it looks like in long section, and it's open in all directions. And we think there's also possibilities of structural offsets. I see a large circular feature, apart from the one I just put on there. But we think that there's a lot of untapped potential there. Mayday, I'll race through because I'm running out of time. So regional potential, look, this is something, on our ground, Trove, which is a treasure trove. I don't know if many of you have used it, but if you've got old prospects, I thoroughly recommend going back and Googling Trove and seeing what happened back in the day, because in March 1900, a journo for the Sydney Morning Herald went and walked from Cobar down to Mount Hope and onto Hillston or Condobolin, and he wrote a series of papers about his experiences, and most of this is on our ground, and it's entertaining and enlightening reading. A 6-year drought was underway, and it was 110 degrees without a blade of grass. He writes very well. But you can see some of our regional prospects where essentially we haven't got to those yet. So there's massive upside to our tenement holding beyond our outstanding copper deposits. Thank you very much. Please come by the booth if you've got any questions. We look forward to talking to you. Thanks.
Thank you, Rob. Aidan Platel joins us now. Aidan is Managing Director of Auroch Minerals. Welcome along, Aidan.
Good. Yeah, thanks very much. Good morning, everyone, and thanks for the opportunity to give you a brief update on Auroch Minerals and how we are leveraged to the future. Just the usual disclaimers there that you can read later. So what are we all about at Auroch Minerals? Well, we have a very clear two-streamed approach to our strategic portfolio, and that is to recognise value from the development of our existing resources whilst we look to create further value from exploration success via new discoveries. Just to elaborate on that a little, we have existing high-grade nickel sulfide resources across our 3 projects in Western Australia. With Saints in particular, we've initiated scoping studies. We have a JORC 12 compliant resource of over 21,000 tonnes of contained nickel at a high-grade 2%. And at the other 2 projects, Nepean and Leinster, we're really looking to upgrade those resources into a JORC 12 compliant resource later this year. So in that sense, we're really looking to push forward those existing resources towards development and potential production, and in that sense, be leveraged to the strong nickel price. In parallel to that, we obviously have our exploration focus. We have really high potential targets for critical future minerals, including nickel, copper, cobalt, zinc, and lithium across our whole portfolio. And we have a very strong, experienced exploration team to really drive some aggressive exploration programs and make those new discoveries and create further value for the company. And just to touch on those critical future minerals, and I won't go into this in too much detail as there are other presentations at this conference about these, but obviously it's really about the future renewable energy sector. Obviously, a big part of that is the electric vehicle market and the batteries that they will require. And that's really key to our focus, our main focus in Western Australia on our nickel sulfides, which obviously contain that tier 1 nickel products, but also contain significant amounts of copper and cobalt and PGEs. But further to that, EV market in the renewable energy sectors is obviously involves solar. And in addition, so zinc is pretty critical to the solar energy sector. And in that sense, that really underpins our exploration focus on our copper zinc projects in South Australia. So a quick overview of our corporate structure before I get stuck into the projects. At our current share price of 12 cents per share, we're around a $43 million market cap with roughly 360 million shares on issue. We have $9 million cash in bank, so we are well funded to progress our programs throughout the year. And really that does leave a pretty cheap EV, I guess, when you consider the quality of our exploration projects and also the in-situ value of our existing resources that we've already defined. We've made some changes recently to our board. We've brought on Mike Edwards as Executive Chairman, which really rounds out the skill set of our board. So we have a very strong, experienced and high quality board and senior management to really drive our projects forward. So looking at our projects and first looking at our nickel sulfide portfolio in Western Australia, all 3 of our projects are located in the Northern Wiluna Greenstone Belt. So it's a tier 1 jurisdiction for nickel sulfides. Obviously some very large, very high grade existing mines in this belt, but yet it's very underexplored still with, I think, some really huge potential to make some significant new nickel sulfide discoveries. With that existing mining infrastructure comes the existing processing infrastructure. So there are 5 processing plants within trucking distance of all 3 of our projects. And in that sense, it really allows us to push forward our existing resources into production and potential production, development and future production. And it's really quite a unique setting, globally unique setting in that sense, where we can take relatively small but high grade shallow resources and look to generate value and be leveraged to the nickel price through that toll treating arrangement, whilst we explore for new exploration success and nickel sulfide discoveries. So looking in more detail at these projects, starting with our Saints Nickel project, it has our largest and most advanced resource, being a JORC 12 compliant resource of over 21,000 tonnes of nickel at a high grade 2%. Based on that, it starts very shallow. It's within 40 metres of surface. We have fresh primary sulfides. So really, we've kicked off a scoping study. We're well advanced into a scoping study on our Saints project already. And at current nickel prices, it's looking pretty attractive. So we do expect to have the results from that initial scoping study midway through the next quarter, pending results from labs and metallurgy. As part of that scoping study, last spring, we initiated some baseline environmental studies. These are well beyond what is required for a scoping study, but it really will allow us to be able to fast track this project towards development and production. We've also kicked off in January quite a major diamond drill program. Up to 5,000 metres of drilling has been planned at the Saints. Really a threefold focus there. We're looking to infill drill and increase that resource from an inferred to an indicated category. We're also looking to take those to get some bulk samples, bulk composite samples for the metallurgical test work, which is pretty critical to the scoping study, being nickel sulfides. But as part of that as well, we do have some exploration drilling, some extensional drilling outside that existing resource, and particularly down plunge beneath St. Patrick's and St. Andrews, where we can see some significant potential for further mineralisation. Most of the drilling to date, nearly all of the drilling to date, has been focused on that first 350 metres from surface, which in Kambalda style nickel sulfide mineralisation is pretty shallow. And so we really can see some great potential down plunge to get onto that feeder channel mineralisation beneath the St. Patrick's and St. Andrews channels, and through that really add some significant tonnes to our resource. Our second nickel sulfide project is the exciting Nepean project, quite an iconic project, being the second operating nickel sulfide mine in Australia. From 1970 to 1987, produced over 32,000 tonnes of nickel at an average recovered grade of 3%. So very high grade nickel sulfides, very nickel rich sulfides as well. So we can see three main focus areas to really build a significant nickel sulfide inventory there at Nepean alone. The first area is the historic mine area, where we have remnant nickel sulfide resources, and in particular, that really shallow high-grade mineralisation in the mine area. There's the Nepean Deeps target area, where we're looking for those down plunge extensions to the known nickel sulfide mineralisation beneath those old workings. And then there's the regional exploration, where we have 10 kilometres of very underexplored, very fertile ultramafics. Looking first at that historic mine area, and you can see there from our drilling last year, some of our results there, some very thick, very high grade nickel sulfide mineralisation within 50 metres from surface. So it really does lend itself to a potential open pit mining scenario where we could generate some significant early cash flow. So we have kicked off an internal scoping study looking at that material. We're well underway, well advanced into that scoping study as well. Obviously, a critical part, being so close to the surface, there is a level of oxidation on those nickel sulfides. So the metallurgical test work is very critical to the scoping study and really underpins the study moving forward. On that note, we've quite advanced on our met work. We've done 3 bulk sample tests to date, and 2 of the 3 samples have successfully floated and produced a saleable concentrate grade. So very positive news thus far on the metallurgical work. That work's now continuing to really optimise the metal recoveries, and we expect those full results in March. And as I said, that really underpins the study moving forward. The second main area is the Nepean Deeps target. Obviously, there's an obvious analogy to the Western Area's Flying Fox nickel mine, where we have high-grade nickel sulfides, mineralisation being cross-cut by pegmatite intrusions. I guess the key takeaway in both locations here is those pegmatite features are later geological features. They came along a long time after the nickel sulfide mineralisation was in place in those channels. So there's no real logical reason why the mineralisation doesn't keep extending beneath the pegmatites at depth. as it did in the historic Nepean mine workings themselves, and as it did obviously at the Flying Fox mine. Late last year, we successfully drilled a 1,300 metre hole beneath the old workings. We got through the pegmatite and we successfully intersected some very fertile ultramafic units. We've identified 2 untested downhole EM conductors, which are coincident with those ultramafic units, and as such present some pretty compelling drill targets to follow up on. Obviously, drilling from surface, it's quite difficult and very expensive. So we are really looking forward to our results from our scoping study and looking to options to get back underground and perhaps drill out this target from underground in the future. Obviously, the third main focus area for Nepean is the regional exploration. We've just completed quite an extensive ground IP survey in the northern part of the tenure. Very successfully delineated some compelling targets for both nickel and gold mineralisation, coincident with the greenstones and the ultramafic contact there. We've 3,000 metres of RC drilling planned to follow up on those targets, those high priority targets, and we've submitted our work permit application. So as soon as we've got that in our hands, we'll kick off that program. Also in this northern part of the tenure, there's some significant lithium potential. We've identified some LCT pegmatites along strike from old lithium workings, rock chip samples of up to 2.26% lithium oxide at surface. So we do have some pegmatite intersections on neighbouring RC holes that we initially drilled for nickel mineralisation. Those have been resubmitted to the lab for reassaying for lithium. Those results are pending, but pending positive results, I think then we can expand that drill program to include some lithium-focused holes in that area as well. Moving on to the Leinster nickel project, and again, like the other 2, there's some known massive nickel sulfide mineralisation at the Horn, combined with some very underexplored, very fertile ultramafics along strike. Earlier this year, we did quite an extensive technical review on all of the data to date. And through that process, we've identified some very key geological features previously unrecognised at north of the Horn mineralisation and at the Woodwind prospect. Very compelling drill targets, and as such, we've got 2,000 metres of diamond drilling planned to begin in March to test those drill targets. One thing of the nickel sulfide mineralisation at Leinster, at our Horn, it's relatively high in copper, cobalt and PGEs for this Campbell style mineralisation. And significantly, it's very low in magnesium. So it really does present quite an attractive potential mining scenario to get that low magnesium ores and potentially blend with the high magnesium ores that are traditionally around the Leinster area. So moving to South Australia, where we have 3 base metals, so copper, zinc projects. Earlier this year, we completed a very short diamond drilling program at our Aidan project to follow up on a previous high-grade intersection of over 15% zinc at our Raglas Range prospect. The drilling's been completed, very hampered by the recent flooding and raining, but we've completed that program and we're just in the process of finalising some downhole IP on those holes. And we're planning some follow-up drilling on some of those potential structures along strike from that high-grade intersection. More recently, our neighbours have intersected some significant mineralisation in copper, lithium and rare earth minerals on the adjacent tenure to our ground in very similar geology to what we have on our ground. So further to the zinc exploration, we're very keen to get out there, get back on the ground and do some systematic exploration for these possible polymetallic occurrences. So looking ahead, some key milestones, and obviously a very busy slide, but it really does show that we have a very busy 12 months and beyond ahead of us for Auroch Minerals. Certainly that 2-streamed approach, we are underpinned by the scoping studies, particularly at Saints and also at Nepean, and some very aggressive exploration for those critical future minerals across all of our 6 exploration projects. We're obviously very aware that there's no point in potentially supplying the future renewables energy sector if you're going to go about it the wrong way. So we do have a sustainability plan in place, and to make sure that our ESG is very central to our core strategy and that we go about our business in the exploration and potential future development in a very sustainable manner. Just quickly, this is a peer comparison of our nickel sulfide peers on the ASX, and it really does show that we're ticking all the boxes and offering something quite unique in that we do have shallow, high-grade, nickel sulfide resources, very close to existing processing options within a tier 1 jurisdiction within Australia, that we are pushing towards potential development and production. And at the same time, we're very aggressively exploring for those new discoveries that we can create significant further value for the shareholder. I guess to summarise then, why invest in Auroch Minerals? We really are leveraged to the increasing nickel demand, that demand for those tier 1 nickel products and the rising nickel price with our high-grade shallow nickel sulfide resources, with the potential that we can drive them to early and near-term development and possible production. At the same time, we have those really highly prospective exploration targets for those future critical minerals across all 6 of our exploration projects. And we are very well funded for aggressive exploration and subsequent news flow throughout 2022. So thanks very much. We have a booth here, booth 11, so please feel free to come and see us and have a chat with our exploration team if you want to know more. Thanks very much.
Indiana Resources is exploring for gold in the underexplored Gawler Craton in South Australia. To tell us about the Indiana story, we welcome Felicity Repacholi-Muir, Technical Director. Felicity is a professional geologist and has worked with several public and private companies across a 20-year career. She's also a non-executive director of Widgie Nickel Ltd and Recharge Metals in WA. Now, somebody's just handed me, no, I'll get to that later. Somebody's lost a pair of glasses. Go see the radio desk. They'll sort it out for you. In the meantime, Felicity.
Thanks for the welcome, Jerry. It's a pleasure to be here on behalf of Indiana Resources. Today, I'll predominantly be talking about our project in the Gawler Craton, a gold project, which we recently acquired. A quick corporate snapshot. We have just shy of 434 million shares on issue, a market cap of 26 million and 2.2 million cash in bank. We have an experienced board with Bronwyn Barnes as executive chair, Bob Adam as non-executive director, and myself as technical director. I joined the board of Indiana mid last year and just recently transitioned to technical director to cover off all things South Australia. We have a very tightly held register with the top 20 holding in excess of 54%. Our register is a strong, supportive register with a lot of high net worth individuals. Today's story will be in 2 parts, predominantly focusing on our exploration activities of our gold assets in the central Gawler Gold Craton, and then an update on where Indiana is at in regards to the arbitration process relating to the illegal expropriation of our Nataka Hill nickel asset in Tanzania. So where are we? When Indiana's Nataka Hill nickel asset was illegally expropriated, Indiana was on the hunt for a new project. The board were keen on securing a high quality asset in Australia, keen to not repeat any processes in Africa, and wanted to be in the gold space. We acquired 2,600 square kilometres from a private entity called Paterson Resources. And whilst the deal was being finalised, we continued to add to that portfolio, and we've continued to add to that strategic package now. So we hold just shy of 6,000 square kilometres, a very significant, predominantly contiguous land package in an underexplored gold province. It's a proven gold province illustrated by Challenger, up the top there. We've got Tunkilia, the Tunkilia Gold Project, which adjoins the southern edge of our tenements, and the historical mining centre of Tarcoola, pretty much on the northern edge of our tenements. The last time the gold province experienced significant activity, exploration activity, was about 20 years ago. Fast forward to now, and the area is experiencing a resurgence in activity and has been consolidated by a few players, with our neighbours of Barton Gold, recently listed, Mamota and Vale. The ground compiled by Indiana is proven gold ground, but underexplored, with, as I mentioned, the last phase being done predominantly in about the 1990s. It's sparsely drilled. However, we were really pleasantly surprised, or not pleasantly surprised, it was really exciting to note that there were lots of historical gold intercepts that we had ready to get moving on. All of the historical ones are in the white bars, with our recent 2021 drilling in the yellow bars. I'll highlight a few of these. So in the middle here, we have Area Dam, which lies on a fully granted mining lease. It was a high-grade historic mine, producing about 2,000 ounces at an average grade of 35 grams per tonne. And we've got some great results there that we're really keen to follow up on, including 4 metres at 10.2 and 3 metres at 13.8. Over to the west, we have Boomerang, which has experienced really limited RC drilling, 4 metres at 5.44 and 2 at 10.5. Again, last drilled in the 1990s. And then we also have Double Dutch over here. Double Dutch has previously intersected wide intercepts of greater than 1 gram per tonne gold. So that brings us to this area here highlighted in green, which contains the Minos and Ariadne prospects. This area was the only area that Indiana had the required regulatory approvals to get to work on the project. So we had native title and environmental clearances, and we were able to hit the ground running there. And, you know, with historic numbers at 12 and 10 and 24 at 2, it, you know, has proved to be a really great spot to start. So with the acquisition completed late 2020, we wasted no time in 2021, kicking off drilling at Minos in January. Throughout the year, we've completed over 12,000 metres of RC and diamond drilling, 4,500 metres of air core drilling over the Lake Labyrinth shear zone, various calcrete programs, and have progressed native title agreements and completed some heritage surveys. So Minos was where we started drilling in January. We've completed just shy of 50 RC and diamond drill holes. And the results have really confirmed that the Lake Labyrinth shear zone is a significant gold-bearing system. Gold mineralisation has been intersected over a 600-metre strike and remains open to the northeast, southwest, and at depth. The alteration system at Minos is readily identifiable in discrete magnetic flows throughout the magnetic imagery. The mineralisation occurs in a semi-vertical shoot with 3 main zones of gold mineralisation intersected to date, from 12 metres below surface to extending to at least 230 metres vertical depth. We've had some really compelling results at Minos, including 21 metres at 8.43, 35 at 7.08, 20 at 7.31, and 10 at 8.83. We're currently awaiting our results from our December drilling program, which are the green drill hole traces there. And the pink traces are the planned drilling program, which was planned to be completed in January, but as Aidan discussed in his previous talk, South Australia has been pretty much underwater. So that's been slightly halted, but it's drying out now. So we'll be really keen to be back on the ground shortly. Now just moving to Ariadne. Ariadne is located just 700 metres to the southeast of Minos, and we completed our first maiden program in October, completing just a modest program of 12 holes, just to really confirm the historical results and broaden the exploration along this Lake Labyrinth shear zone. Our results were in line with expectation, and we're keen to get back into there shortly. Got 10 at 2.24, 5 at 3.59. The alteration intersected in the drilling at at Ariadne has been the same as that intersected previously at Minos, indicating that this is the same part of the mineralisation event within the Lake Labyrinth shear zone. Again, mineralisation remains open to the northwest, southeast, and at depth. So now just stepping out a bit. So as you can see, Minos and Ariadne lie on this Lake Labyrinth shear zone. The shear zone is a regional scale structure with the width of 100 metres and a strike length of at least 60 kilometres. So our success at Minos and Ariadne is really highlighting the potential of the Lake Labyrinth shear zone to us. The 2 prospects, Minos and Ariadne, are in areas of outcrop or shallow cover and with historic workings. And these represent less than 1 kilometre of the strike potential along Lake Labyrinth shear zone. So we have in excess of at least 50 kilometres of this prospective zone to continue to explore. You can see that there's various calcrete anomalies along this trend. And it's important to note that calcrete has been really important for the discoveries within the central Gawler Craton. The Dominion's discovery of the Challenger gold deposit is related to this in 1995, and it's also been attributed to the discoveries of Tunkilia and also more recently Marmota's Aurora tank. So we have Partridge, which has a significant calcrete anomaly, which we've just completed heritage survey over, and also North Hicks, just to the southeast of Ariadne, which again has a decent calcrete anomaly and has experienced very limited drilling. Additional to the main structure of the Lake Labyrinth shear zone, there are also subsidiary structures with historic workings, such as Company Well, which we're keen to get to work on. And again, we've just completed a heritage survey over this. So we're really looking forward to exploring the shear zone as a whole. We believe that Minos and Ariadne are really just the tip of the iceberg. We're looking forward to continuing to explore this 50K corridor. The southern portion of the project is covered by a different geology. It's covered by Archean greenstone belts of the Harris Greenstone domain. And we've just recently progressed our native title agreements over this area, and we're looking forward to getting on this ground soon. And this is where those other prospects that I discussed earlier, Double Dutch, Boomerang, Canella Rocks, Area Dam, all lie within that. So we're super keen to get onto that area. Right, and now to just move away from South Australia and our exploration over there and step into Tanzania and our $127 million compensation claim. So I'll give you a bit of a background to this. So Indiana previously held the Nataka Hill nickel asset. It was an advanced nickel sulfide asset within Tanzania. It had had a bankable feasibility study completed on it and had a resource of 56 million tonnes at 0.78% nickel equivalent for 437,000 tonnes of nickel. 60 million US had been spent on the asset and it was ready for development, just waiting for the nickel price to recover. So obviously an asset that would have had tremendous value for Indiana in the current market. In July 2017, the government of Tanzania amended the Mining Act by removing the legislative basis for retention licenses. Retention licenses no longer existed in the Mining Act, and there was no replacement classification given. There are 11 retention licenses cancelled in Tanzania, one of which was the retention licence pertaining to the Nataka Hill nickel asset. Indiana actively engaged with the government in order to resolve suitable tenure for the asset. However, due to no agreement being able to be reached, in January 2020, Indiana triggered a dispute with the government of Tanzania. This was made possible by the fact that the project was held by Indiana's UK subsidiary, which meant that Indiana was afforded protection under the UK-Tanzania bilateral trade treaty. Has engaged highly experienced international arbitration firm, Lalive, who will be representing Indiana throughout the arbitration. And it is important to note that all legal costs are funded through our US $4.65 million litigation funding facility with LCM. So this means that costs are only repayable in the event of a successful award that is recovered from the United Republic of Tanzania. The claim for compensation remains at 127 million Australian. The full arbitration timetable has been agreed until 2023 and all hearings are held in London. The first hearing was in April 21 and we lodged our full memorial statement of claim in July 21 with counter memorials lodged last month. So the big question that everyone asks, if Indiana is successful, how do we get paid by the government of Tanzania? The great thing is we don't have to wait to get paid. Indiana can seize Tanzania's government assets in any country of the world that is a signatory to the World Bank, which is 155 member states, including Tanzania. So that's a fair few assets out there. Just as an aside, the illegal expropriation of the Nataka Hill nickel asset is often a point of interest. So please feel free to drop by our board. Our Executive Chair, Bronwyn Barnes, is always happy to chat further regarding this. So to summarise, why invest in Indiana? We have a large ground holding in an underexplored proven gold province. We're actively exploring the ground with multiple drilling programs planned for the project. We're eagerly awaiting results from our December drilling program at Minos, and we also have Calcrete results on the way. As well as this, shareholders have a fully de-risked free option on the $127 million from the government of Tanzania. We're just at booth 64 out in the corridor, so please feel free to drop by. The entire board is here and we'll be happy to have a chat. Thank you very much.
Thank you. Thank you very much. A pair of glasses has been handed in at the registration desk. If they're yours, go claim them. We say good morning to Rob Murdoch from Austex, who is watching online, presumably with pants. 43 investor presentations yesterday, all from Explorer Conference. The previous record was around 33, so we beat the record by 10 yesterday, according to Rob. He said we could have added more, but we had to draw the line at 6 p.m. Later releases will be reported in the morning. That's this morning, so look out for that. Azure's Andover nickel copper sulfide project, located in the West Pilbara region here in WA, is progressing through the mineral resource and scoping study stage. With more, we welcome Managing Director Tony Rovira. Tony.
Thanks, Jerry, and thank you very much, ladies and gentlemen, for the opportunity to talk to you today about the Azure Minerals story. 2021 was a really good year for us. We've got a nickel sulfide project called Andover, and we've got a gold project called Barton. The results have been absolutely outstanding, and going forward, we see that 2022 is going to be an absolutely cracking year for us. Disclaimer and statements can be seen on our website. And moving along, it's important that we acknowledge the traditional owners of the two projects upon which we operate. We have really good, strong relationships with both of those groups, and I do thank them for the very cooperative relationship that we've been able to develop and maintain going forward. So things are very good for us on that particular front. Azure has also implemented a sustainability plan, and the ESG component of that is well underway, and we acknowledge that that has to be a very strong component of the way that we operate going forward. And it's important that we make sure that as a company, we fulfill all the obligations that come with operating in this industry. Corporately, we've got 310 million shares on issue, market share price of about 40 cents at the moment, so about $124 million market cap. At the start of this current quarter, we had $19 million in the bank, so the company's in a very secure position financially. The major shareholders are the two biggest ones, Deutsche Balaton, who are a listed German investment fund, which are on the board of quite a few West Australian producing companies and explorers as well. Mark Creasy and his group with 16%, very important backer. And there's a number of other smaller holders there, but no less influential as well. The two main projects we've got are the Andover Nickel and Copper Project, which is located in the West Pilbara region of Western Australia, and the Barton Gold Project, which is located just to the south of Leonora. Andover is the one that we've been working on the most, and so that's the one that we'll focus this presentation on principally, but we will talk a little bit about the Barton project towards the end. So Andover is a nickel copper sulfide project. It's a joint venture between Azure and the Creasy Group. Azure owns 60% and the Creasy Group own 40%. That 40% is free carried through to the decision to mine, after which there will be a pro rata contribution to expenses going forward. And it's in the intention of Azure and the Creasy Group to be able to take Andover right the way through the exploration, the assessment and the development and into operations for this project. So Andover ticks the boxes in terms of clean and green energy metals. So we've got nickel, we've got copper and we've got cobalt. And the metals prices for those particular commodities are very strong and are continuing to rise. And that augurs very well for the economics of our project. We own most of the Andover mafic, ultramafic complex, intrusive complex, which is what hosts the mineralisation. We were able to pick the project up at around about the middle of 2020, which was probably 3 to 6 months ahead of the rush to grab projects. So that put us in a very strong position. Proactively, we were able to to acquire the project from the Creasy Group. Simultaneously with that, we actually built up a really good Australian team in place. So we're probably 6 months ahead of the rush to get technical people as well. So both in terms of project acquisition and hiring people, we were ahead of the curve and were able to secure not only good projects, but great people as well. We've had 4 really good nickel sulfide discoveries on the Andover project, and we've got a numerous other targets which have yet to be drilled. So with the cash position we've got at the moment, the company's in a very strong position. So Andover's located in the West Pilbara region of Western Australia. So it's a quick flight, 2 hours from Perth to Karratha. It's a half an hour drive along the Northwest Coastal Highway, which goes to the east, and it goes through the northern part of our tenement, which is shown there on the image as the blue rectangle on the right-hand side. In terms of infrastructure and services, you couldn't get a better located project. So within about half an hour's drive of the project, we've got everything we could possibly want in terms of assets and power and services and accommodation, all those sorts of things. And we've got cell phone coverage over the entire project area. So great location. So let's zoom in a little bit to the project itself. Once again, the tenements outlined there in blue. It's 70 square kilometres, covering a fair proportion of the Andover mafic, ultramafic intrusive complex. Shown there as those stars are the targets and prospects that we have identified as having good potential for nickel and copper sulfide mineralisation. Interestingly, or importantly, it's in the southwest corner where we've actually had the most success to date. We have the Andover nickel copper deposit down right in the bottom left-hand corner there, which is shown as that red mustache, if you like. And then there's the red stars, which are all the other targets. Most of the ones down in that southern area are contained within what we've called the southern mineralised corridor. This is a particularly geological distinctive rock type. It's called a taxitic gabbro, which is the latest intrusive event into there. So we've had the Andover mafic, ultramafic intrusive complexes formed, and the very last event was this intrusion of this taxitic gabbro, and that is what's brought in the nickel and copper sulfide mineralisation. Now, we have virtually no soil cover over this whole area, so we've got really good rock types, really good exposure of the rock types at surface. And wherever we find this taxitic gabbro cutting across the countryside from basically a southwest to a northeast direction, that actually hosts mineralisation. And there's a chunk of it on our booth out there if you want to have a look at it. It's got disseminated nickel and copper sulfides visible in it, which is at surface. And within that, you get these gossans that are outcropping, and the gossans are representative of the massive nickel sulfides that occur at depth. And when we've gone and drilled these outcropping evidences of mineralisation, we have hit nickel sulfide mineralisation. And most times they also coincide with the electromagnetic surveying or electromagnetic anomalies that we've identified. So there's a very strong coincidence in this corridor, 100% success rate, if you like, of outcropping gossan mineralisation in the taxitic gabbros, EM conductors at depth, you drill them, you hit nickel sulfides. It's 100% success rate on that. And there are a number of other targets in there that you can see with Atrium and Woodbrook and Seaview, etc., which have yet to be drilled, but have all the hallmarks of containing more nickel mineralisation in the area. So great observations of our technical team, which has really given us a big step forward. Now, if we zoom in a little bit onto the Andover nickel copper sulfide deposit itself, it's shown there on the right-hand side there, which is once again that red mustache looking thing. And then on the left-hand side, we've got the drilling that we're currently doing on what we call the Ridgeline prospect. On the Andover deposit itself, it outcrops as gossans. We've drilled underneath it. We've identified nickel sulfide mineralisation starting within 20 metres of surface. It goes to over 550 metres below surface in a continuous shoot of mineralisation. It's over 400 metres long in an east-west direction, and it remains open to the east and to the west and at depth as well. Within that zone of mineralisation, which is overall is around 15 to 30 metres wide, and it runs around about 1 to 1.5% nickel on average over that envelope, and about 0.5% copper. Within that, there are massive sulfide zones, quite continuous massive sulfide zones, around 4 to 8 metres wide, running 2 to 3% nickel and around about 1% copper. And that is very continuous throughout that area. Now, the drilling is now completed on the Andover deposit itself. All the data has been received. It's gone off to the consultants, and a mineral resource estimate will be released in March of this year. Having a look at the long section that was identified in that previous slide. The long section here, we're looking at surface down to about 600 metres below surface. The Andover nickel deposit itself is on the right-hand side. It's shown there as the orange and yellow zone or colorations there, and the drill holes that we've put into it are shown as ones that have hit mineralisation, the red and the orange and yellow as well. It remains open to the east and west and at depth, as I said, but we've decided to continue or conclude the process of doing the initial resource, and that's happening as I speak. And then we've switched the drilling over onto a bit further to the west, to Ridgeline. We've got quite a number of holes that have gone into that. We're targeting deeply buried EM conductor plates. We've hit some really good mineralisation in there. You can see there's a couple of examples of the drill hits that we've got late last year from there. And the drilling is continuing at Ridgeline and further out to the west of that as well. So there's a lot of work that's being done in this particular area, but we're not neglecting the rest of the project area as well. Now, this is an image that shows the electromagnetic signatures from the airborne survey that we flew, the pink and the orange and the purple colours. They're the highly conductive areas. We've identified numerous conductors that have yet to be tested. We've obviously drilled out the Andover deposit. We've drilled EM conductors at the Ridgeline, the Seaview and the Skyline prospects. All three of those, we've intersected significant, substantial nickel sulfide mineralisation in those drill holes as well. So that's 4 from 4 in that area. We've recently gone and drilled 3 other targets. One we've called Pipeline and VC18 East. So that VC18 is that very large football-shaped EM conductor there. We've also drilled at VC41 further to the northeast. Those 3 targets have now been tested with a couple of holes into each of them, and there'll be an announcement regarding the visuals and what we've observed in that drill core coming out in the near future. We also have multiple other conductors that need testing as well, and those drill testings are being carried out or on an ongoing basis going forward. So where to from here for Andover? Well, the mineral resource estimate will be out next month. We're currently drilling on those regional targets at Ridgeline, Pipeline, VC41. We've got all that other regional exploration planned for the rest of this year. We've also implemented, and late last year, we implemented the development studies program. So we have a scoping study underway at the moment. Completed the first batch of metallurgical test work. Middle of last year, we're now into the more advanced metallurgical test work. That's underway. We get excellent recoveries and really clean, high-grade concentrates, very marketable to into the sales process. We've completed the geotech study, mining studies in progress at the moment in conjunction with the resource modelling, and all of the other components of the development studies are underway. We anticipate, if all goes well, that we expect to have a scoping study ready for publication sometime in the 3rd quarter of this year. So that's the Andover project. That's the major project, the most important focus for us in terms of our expenditures and our manpower. But we've also have the Barton Gold project, which we are ramping up quite significantly now. It's 100% owned by Azure. We picked up the initial exploration license in the middle of 2020. It was granted in the middle of 2021. It's shown there in blue. That's the large one. There's about 200 square kilometres in there. And then all the other ELs that you see, all these other tenements that you can see, applications at this stage, but there's over 1,000 square kilometres of land that we have got either granted or we have applied for. It's in an area, the Kukani district is actually a red hot area as far as gold exploration and discoveries are going at the moment. You have Genesis off to our west, where there's got over 1.6 million ounces, and Mike Fowler was talking about that yesterday, and that's looking really promising for them. Saturn's coming up with their presentation shortly, and they've got a really great project called Apollo Hill immediately to our east. And then to the southwest, we've got a number of other companies like Nex and Metallicity who are drilling out there and actually hitting some good gold as well. And in addition to that, there's a lot of merger and acquisition activity happening in that district. Looks like I think that Genesis is going to be taking the lead on that when their new managing director starts, Raleigh Finlayson, next week. So that's going to be a really interesting one. So let's zoom in a little bit on the granted tenement we've got. This is 200 square kilometres of land. In the southwest corner is a place called Daisy Corner. It's a prospect down there. That's the only area on the tenement where there's been significant drilling to test the bedrock. It's all covered with sand cover, and the only drilling was very shallow, and most of it never got down to test bedrock, except in the Daisy Corner where they did a few holes. They got into bedrock, into the basalts, and they hit a little bit of gold mineralisation. That was all in that green rock there that you can see, those mafic rocks. Immediately to our south, we've got Genesis Puzzle North gold discovery, where they've hit a lot of gold mineralisation. We zoom in on that area now. On the bottom half of that image, you can see those green dots are all the drill holes that Genesis has drilled. There's a lot of work that's gone on. They've hit some cracking good drill intersections in there, very close to the tenement boundary. The mineralisation continues right up to the boundary. We're currently drilling on that at the moment. We have a RC drill rig drilling out here. Visually, we're hitting things that look similar to what Genesis has described in the literature. So I would say that there's a very good chance that this mineralisation that comes along the puzzle trend up through here continues up into our ground as well. So we are now putting an increased focus on our Daisy Corner and our Barton project. So lots happening with the company at the moment. We're cashed up. We've got two cracking good projects. Nickel and copper sulfide mineralisation, that's what everyone's looking for. Gold is going to be more and more important within the great uncertainties of the world going forward. So we're in a really good position as far as our projects go. We've got a good team, got good money, and a lot of news flow that's going to be coming forward in the rest of this year. And I thank you very much for the opportunity to tell you the Azure story.
As the world continues to transition to electrification of industry and battery storage, high-quality nickel assets with strong ESG credentials are becoming increasingly hard to find. Centaurus Metals, with its Jaguar nickel sulfide project, is very well positioned to meet this transition. And here to tell us more is Centaurus GM of Exploration and Growth, Mr. Roger Fitzhardinge. Good morning, Roger.
Thank you very much, Jerry. Good morning, ladies and gentlemen, and I'm here to talk to you about the Jaguar nickel sulfide deposit, which is located in Brazil. In December of last year, we announced our upgrade of the resource, which now delivered more than 730,000 tonnes of nickel sulfide, and that puts Jaguar as the largest nickel sulfide deposit on the ASX that is not held by a major. So it's a significant deposit. As well as that, it's located in Brazil and in the Carajás, where we have access to infrastructure and, importantly, 100% renewable energy by the time this comes online. So we believe that Jaguar is well positioned to deliver 20,000 or more tonnes of nickel sulfate products to the EV market by the end of 2024. I won't dwell on the nickel sulfide demand because we have a commodities analysis analyst talking about it shortly after me. But what I will say is these types of deposits, nickel sulfide deposits, are very hard to find. So when the nickel demand rises, the demand for these deposits are going to ride with it. And hopefully in this discussion, I can explain to you why we think Jaguar is one of the better ones in the globe. So we're located in Brazil. We've been operating there for 12 years, and we think Brazil is an excellent place to operate a mine. They have a long history of mining, with the third largest mining company in the world, Vale, mining since the 70s. They have a very well regulated and easy to follow mining regulation system and tenement system. And importantly, the royalties go back to the community. 65% of royalties that come out of these mining projects go back to the local community. So the communities get behind the projects. The environmental process is well understood. We've licensed things before. And recently, a lot of the base metal minerals have been added to a strategic mineral policy, which means the government is now trying to fast track these projects into production. But most importantly, Brazil is a renewable powerhouse. At the moment, about 80% of the renewable energy in Brazil is the energy in Brazil comes from renewables and mainly hydro. So by the time we get into production, we believe this will be very close to 100%. So we're in Brazil, we're in the Carajás in the north, which is a really prolific mining province. It hosts multiple world-class deposits, including the Salobo copper gold mine, which is the second largest ISCG mine in the world and the largest iron ore mine in the world in S11D. We're about 40 kilometres north of the towns of Tucumán and Orlando do Norte, and they have a population of over 100,000 people. And those two towns, they service the Onça Puma ferronickel plant, which is a $3 billion plant. So there's plenty of skilled labour and service providers at the ready. There's also a 138 kV station, which will allow us to hook into that national grid. We've been in Brazil for 12 years now, so the board is very experienced in Brazil. We've progressed projects through the development and licensing stage, and we've got people in the management team that have experience in licensing, developing and operating mines and nickel mines specifically in Brazil. So we've got a great team led by Bruno Scapelli in country and Gaudius Montresor, who's been responsible for keeping those. We've now got 14 rigs running 24/7. So Bruno leads our charge in terms of getting the licensing done, and that's a key part to getting this project completed by the end of 2024. We've lodged our ERIMA, which is the environmental application, and the mining lease application in third quarter of last year, third and fourth quarter, and we expect those to be granted sometime during this year. We're working with the landowners. We've actually purchased, I think, over 70% of the land in which we operate, and most of that land is pastoral areas, so we see no impediment to getting this project licensed. At the same time, we're working with the local community, working a lot on developing and improving accesses and bridges so that we can get in there, but also so that they can get around, and also a couple of community programs. So in the middle of last year, we delivered the scoping study, and as it stands today, the Jaguar Nickel Sulphide project is a combination of open pit and underground mines delivering around 2.5 or 2.7 million tonnes of sulphide ore to a nickel sulphate plant. And that is simply a traditional float plant ahead of a POX, where we will have partial oxidation of the concentrate, and then there will be filtration, purification and SX circuits to produce the nickel sulphate product and some cobalt, copper and zinc byproducts. So we're working on the MET at the moment. We have over 3 tonnes of material in ALS doing the bulk flotation and hydromet work, and that will go a long way to optimising that process and also delivering product that we need for marketing. We've recently contracted Ausenco to be the lead engineer on the DFS study. Ausenco is an Australian company. They have offices here in Belo Horizonte, in Chile and Canada. So they're well placed to help us through this study. They've recently done a couple of base metal flotation EPCM contracts in South America, so they understand the space. The mines you see behind you there, they're based on the resource from March of last year. The December resource has got 30% more nickel. So we're already in the process of re-optimising and rescheduling those mines, and we expect to deliver a further resource in Q3, and that resource will underpin the DFS. So the mining engineers will have their work cut out for them, trying to determine how big this mine can actually be. So these are the economics from the scoping study, and at the price we used back in May was around about $18,000 a tonne. And at $20,000 a tonne, which is $9 a pound, we're looking at about a $1.6 billion NPV with a 70% IRR. Today's spot price, that number increases to 2.5 billion Aussie dollars with a 100% IRR. Now, we can't control the nickel price, but what we can try and control is some of the project development opportunities. The new resource is not in that number. That will be in the next number, and we think it's going to be bigger. We will re-optimise open pit and underground stopes and open pits, and then also reschedule. And we'll also go with Ausenco out to the local service providers and contractors and get local based prices. And when converted into US dollars, we think that can enhance the economics. And as I said before, the process route optimization and trying to get the best recovery through partial oxidation of that concentrate. So it's not only about the cost per tonne of nickel anymore, it's also about the cost to the environment. And we engaged an independent analysis of our scoping study, and that plotted us in the top 3% of global nickel producers in the world in terms of greenhouse gas emissions per tonne of nickel equivalent. And this is going to be a very important metric going forward when the battery makers are looking at the product. At Centaurus, we believe that the best nickel tonnes are those with the lowest greenhouse gas emission and the highest operating cost margin, and that's what we have at Jaguar. What drives that is essentially the high-grade nickel at surface and also our access to 100% renewable energy, 80% at the moment, but we expect it to be 100%. So in December last year, we announced the upgrade to the resource of 80 million tonnes of 0.9% nickel for over 730,000 tonnes of nickel. Importantly, 500,000 tonnes of that is within 200 metres of surface. These are the Jaguar deposits and these are the Onça deposits. That's about a 3-kilometre strike length. The pits you see there are the scoping study pits, and these are the in-pit resource shells that we use for that resource. And they were ran at 20,000 tonnes, $20,000 per tonne nickel. What you see is the pits are starting to coalesce. So they're not only getting deeper, but they're joining up. And what that means is the mining engineers can look at bringing in bigger gear and potentially pushing up the production. So we can, in the DFS, we will not only look at extending mine life with this new resource, but we can also evaluate if we can make this thing bigger. Just as importantly is the high-grade component. If you run a 1% cut across Jaguar, you've got 22 million tonnes at 1.6% nickel. And about 65% of that is within 200 metres of surface. So that gives you really good flexibility at the start of your operation and allows for strong cash flows during payback period So we have 14 rigs on site at the moment, and half of those are now focused on infill. We want to get all that indicated material all the inferred material into indicated ahead of the next resource, because that will underpin the DFS and the reserve, and we can only consider indicated or measured material in that reserve. So we're pushing to bring that up to indicated, and a portion of that will be measured as well. But we're also looking to continue to grow. So we've grown this since our maiden resource in June of 2020 by 200,000 tonnes of contained nickel, and that's in just 18 months. And that was with 4 to 7 rigs. So we've now got 14 rigs on site. A bit less than half of those are now dedicated to resource growth. So our team on site is targeting to get to 1 million tonnes of contained nickel metal by the end of 2023. And that will place us as a world-class nickel deposit. And why we think we can do this is because Jaguar is a little bit unique in the nickel space. It's not an intrusion-related deposit or a commodity-related deposit. It's not constrained by geometry of the intrusion. It is unique in the nickel space, but it's not unique in the IOCG space within the Carajás. And explorers have been exploring this for a long time. It's basically large structures, regional scale structures, scavenging in the case of the IOCG, the copper and the gold, mineralisation from the basement and depositing it out along large structural areas. At Salobo, this thing is being drilled down to 1,400 metres. So we see no reason why Jaguar, which is the same mineralisation genesis, can't be down to the same depth. Our deepest drill hole to date is down to 570 metres, and our average drill depth is around 250 metres. Over here, you can see our deepest drill hole that returned 14.5 metres at 1.5% nickel, including 4.5 metres at 3. And obviously it remains open at depth. So all of these, Jaguar South, Jaguar Central and Onça Preta, actually have underground operations underneath them in the scoping study that were based on the base of the resource. So if we add more resource tonnes, we expect that these stopes to continue down on the resource. So if we step out 50 metres at these deposits, along strike of the deposits, we generally add 10 to 15,000 tonnes of contained nickel. So that means half a year of production on a strike length of 50 metre step out holes. And why do we think we can keep hitting it? Well, the EM that we have on site. So we recently, well, last year we bought some EM. We got that out to site. It has capacity down to 750 metres. And the ore that we have is semi-massive, massive sulfides set within a very resistive rock. So it really stands out. We've got an almost 100% strike rate of drilling plates and hitting some sort of mineralisation. Here you have an example of 17 metres at 4.86 in hole 155. And we have plates that are now a further 250 metres below the deepest drilling, and they'll eventually be drilled out. Beyond the extensional and step-out drilling, we also have a pipeline of greenfields targets that we're going to get to. At the moment, the RC rigs are focused on sterilisation drilling, which is key to getting this project up and running, and we need for the engineering. We expect to get back to greenfields exploration drilling within the next couple of months, and I look forward to bringing you some results from that. So we have a pretty aggressive timeline ahead of us. We're going to deliver a DFS, a new resource, a DFS, and the maiden reserve by the end of this year. We will have the licenses and be able to make a formal decision to mine by next year, and 18 to 24 months of construction will see us achieving production at the end of 2024. It's a very aggressive timeline, but we think it's achievable. Quick corporate snapshot. We did a very successful raise. It was oversubscribed a couple of weeks ago. Most of the top 20 followed their money. The top 20 now holds around 70%. And importantly, there's a couple of North American investors there that understand operating in the Americas and Brazil, and also some guys that understand nickel. So I guess the key takeaways for us is we're focused on nickel. We've got the biggest nickel sulfide deposit on the ASX that's not held by a major. We think we can grow that to 1 million tonnes of contained nickel, which will put it in a world-class nickel deposit. It's really leveraged to the nickel price. At today's spot prices, you're looking at around a $500 million EBITDA per annum, and which happens to be our market cap. And we have a great team. We're well funded with 80 million in the bank. We've got 14 rigs on site and a lot of work to come over the next 12 months. So if you'd like to talk about Jaguar Nickel project, please come and see us at booth 43. Thank you.
Thank you, Roger. Taking us to morning tea is Daniel Hynes, Senior Commodity Strategist with ANZ. The world is embarking on an energy transition that will have massive implications for the commodity sector. Daniel Hynes, Senior Commodity Strategist from ANZ, Australia's lead provider and market leader in sustainable finance, will lead you through the winners and losers of this journey. Earlier, Daniel sent us this presentation.
Hi, everyone. Sorry I can't deliver this presentation in person. In my absence, there are WA ANZ Natural Resources staff attending the conference for its duration. We have a strong local team supporting customers across the full project lifecycle. We're happy to answer any questions you may have and provide support if required. Also, feel free to contact me directly if you have any questions regarding this presentation. The topic is the winners and losers amidst the upheaval in commodity markets. But to be honest, it's mostly winners. Commodity markets are very tight due to a combination of strong demand and ongoing supply side issues. Central to this is the energy transition, which will upend the sector for the foreseeable future. But if we take a step back, growth, although subsiding from current levels through 2021, is still extremely strong. You can see here, after growing 5.6% on the rebound of economic activity post the pandemic, we're expecting to see growth ease back to around 4.1%. But this is still well above trend. And even into 2023, where we're forecasting growth of 3.3%, this should provide quite a strong backdrop for commodity markets. In particular, after coming out of the pandemic much earlier than most other countries, we did see growth start to subside during 2021 in China. This has ended up resulting in officials really looking at measures to stabilise that growth. And we can already start to see that in the credit impulse, where we've seen an uptick over the past few months. But certainly officials now are looking to further that growth support with measures, particularly around the infrastructure side over the coming year. So this obviously should be very positive for commodity markets. And certainly after COP26, we've seen an increasing impact on climate change policies, particularly across energy markets, but obviously across the entire commodity complex. You can see here the composition of energy by sector. And certainly if we are to meet some of the goals by 2050, we're going to see quite a significant fall in energy coming from the fossil fuels compared with renewable energy. What this is doing already is impacting investment in fossil fuels, with investors really driving this change by pushing company boards and sectors to invest more in renewable energies. We are seeing a subsequent fall away in investment in fossil fuels. This is having an impact in coal sector clearly as we start to see that investment fall away. Here, since 2019, we've seen a sizable reduction in investment, particularly in countries outside of China and India, who still have a very heavy reliance on those markets. In particular, Australian coal has suffered from this underinvestment. We can see here back in 2012, 2013, we saw Australian coal mining capex on a quarterly basis of reach around 4 billion Australian dollars. But even if you compare to the levels only just recently, just prior to the pandemic, we were getting quarterly numbers of around 2 billion. That has subsequently fallen to about 1.3 billion Australian dollars. That investment, though, and that focus and that transition away from fossil fuels is going to have an impact or different impact on regions, particularly driven by where they obviously get their key source of energy. For countries or regions like North America and Europe, there's a much more balanced anticipation of that energy source compared with the sources that we see in China and even across the broader Asia, where fossil fuels are a key component of that energy sector. So as a consequence, the real damage, the real sort of bottlenecks that such an energy transition will create are going to really dampen, I suppose, the impacts in the Asian market in particular. The other issue we're battling with is obviously this push towards decarbonisation, really boosting electricity demand. For example, the electrification of sectors such as heating and transport is putting a lot more pressure onto electricity markets. You can see here in China, EV sales have just skyrocketed over the past couple of years. But if you look at other sectors, as I said, such as the heating sector in particular, the shift towards electricity-driven heating systems has been quite phenomenal. This has resulted in huge demand on power sectors across the globe, and clearly that's been impacting markets in Europe and China in particular, where we've seen shortages, in a sense, forcing the closure of a lot of heavy industry. Compounding this has been the uncertainty around weather, which has really impacted renewable energy power generation. You can see here this chart showing you the fuel sources of China's electricity generation, and hydropower has actually been relatively weak over the past 12 months. in part due to the lower than normal rainfall in a lot of those key catchment areas. So hydropower generation, for example, in December was actually down nearly 7% year on year. This just, I suppose, magnifies the issues that renewable power generation will have over the longer term to be a provider of reliable energy. So we do suspect that this transition is going to cause a lot of hurdles in the shorter term. One of those issues in the aluminium sector is these really high costs coming through. Aluminium is a very energy intensive metal. In fact, the most energy intensive of all the base metals, as you can see shown on this chart. With European power prices really surging more than sixfold over the past couple of years, we've already started to see European smelters close a lot of their operations as a result. But it's even deeper than that. Constraints on aluminium supply is being impacted by the emissions of the industry. Chinese officials have been pushing to close operations, particularly high energy intensive smelters using outdated technology. Has really been a feature of that market over the past few years. And you can see here in particular that focus through 2021 resulted in output falling about 20% from its highs at the start, in a sense due to this target, this drive to reduce emissions in heavy industry. The steel industry is another one which hasn't escaped the constraints on output. In fact, it was a real poster boy in terms of Chinese officials' efforts to reduce emissions. And in the past, we've seen officials close down operations around key sporting and world events, such as the Olympics we're seeing in Beijing at the moment. But certainly the efforts to really reduce emissions were really driven hard during 2021. And after a relatively strong start to the year due to strong demand from the real estate sector, we saw steel production suffer as a consequence. In fact, you can see there how precipitous the fall in steel output was. However, the authorities and the Chinese government in particular saw the impact this was having on economic activity. And as a result, they've decided to ease back slightly on those constraints. They've now pushed back by 5 years the target for peak emissions from the steel industry to 2030. So as a result of that, we do expect to see growth return to steel production over the coming years. The industry will continue to drive efficiency gains and the like to try and reduce those emissions, but in a sense, the really hard targets around output of steel will be eased back, and that should see some growth return for the steel and iron ore markets. However, the issues around the energy transition are obviously centred in the oil and gas markets. OPEC was quite successful in managing the real drop away in demand in the early stages of the pandemic with some fairly significant output cuts. But after a couple of years of really managing the market pretty well, we're starting to see some issues regarding restarting a lot of those operations. You can see here in the mid part of 2021, after the agreement to increase output by 400,000 barrels a day per month was agreed to, we've actually seen them fail to reach those quotas over the past few months. A lot of this is due to a lack of investment in the sector by a lot of those producers who have been sitting back and benefiting from the high costs, but essentially putting a lot of that revenue back into, for example, social spending programs in those countries where they rely almost entirely on oil revenue to fund government programs. But there's also been other issues as well. A lot of unplanned disruptions due to conflicts and the like, but it has really been, that lack of investment, which is resulting in this struggle to really increase output. And normally the market would expect to see, more flexible, nimble producers respond as a consequence of that. But US oil shale companies seem to be a lot more subdued and cautious around the output for oil supply. And in fact, we've seen a reduction in CapEx as a result of that, where companies are now more focused on returns rather than growth at all costs. And as a consequence of that, even with prices, up around $90, $95 a barrel, a lot of these US oil companies are still reluctant to plow a lot of capital back into their operations. And of course, Russia is really key to the gas market in Europe. As you previously saw on one of the earlier slides, gas is a major part of the energy system in Europe. And in fact, with France just announcing recently that it's having issues with its nuclear power plant program, that the reliance is falling onto the gas market even further. And Russia's actually been easing back on gas supplies into Europe, in part due to the strong demand domestically, but also as a result, I think, of geopolitical issues as well. Now we have obviously the threat of further disruptions with Russia looking or threatening to essentially invade Ukraine, which could have quite significant consequences, seeing that two major pipelines transit through that country, delivering gas into Europe. And that is certainly going to be a significant issue for energy markets, which are already suffering from relatively tight supplies. Resource naturalism is another issue returning, particularly in Indonesia, where we've seen intermittent export bans on raw materials in the past, but they look to be backing that up now with even with further measures, including increased tariff and taxes, in part to really drive the value-added chain of that production line within the country. And as a consequence, we're starting to see already tight markets disrupted further by some of these bans. Most recently, we saw the ban on nickel ore coming out of Indonesia, but we've also seen one just recently in the thermal coal market as well. And I think this is going to be an increasing issue globally as governments look to support, in particular, their energy markets domestically. Of course, those geopolitical issues can provide some downside to markets, and certainly, the recent negotiations between Iran and the world powers is raising the spectre of Iranian crude oil returning to the market. Now, back in 2016, when the nuclear deal was set, we saw output rise quite strongly. That subsequently fell after Donald Trump pulled the US out of that nuclear deal. But they, with Biden now in the White House, there appears to be a strong push to reactivate that nuclear deal, and this could see sanctions rise, lifted, which would essentially result in production rising, potentially in the order of 1 to 1.5 million barrels a day. Then when you look at the demand side, this energy transition is certainly creating opportunities. In the metal sector, for example, some of the key metals such as copper, nickel, aluminium are going to have a very strong part to play in that energy transition, particularly from the electric vehicle sector and certainly the low carbon power generation. And that is really going to drive growth, particularly for demand for a lot of these metals quite significantly, even though the levels of that output are still relatively low. In the oil market, we're starting to see demand recover from that pandemic. And in fact, some preliminary data coming through just recently shows that essentially world demand is just below that pre-pandemic level around 100 million barrels a day. As a consequence of this strong demand and these supply issues, we're seeing inventories really hit record lows. You look across the board in the metals, in the energy sectors, you know, the levels are quite disastrous. For here, for example, copper down to 3 days of world supply, aluminium 23 days, which is quite low on an historic basis. Even in the European gas market, we can see inventories falling and potentially reaching only 10 to 15 days, or 10 to 15%, sorry, of capacity, which is worse than we've ever seen over the course of records. So certainly, you know, it feels like commodity markets are really running on oily rags at the moment. And of course, the carbon prices itself are starting to really make an impact, in particular in Europe, where you know, we have quite a deep and liquid carbon market. We have seen this really result in some operations in the heavy industry sectors really pull back as a result of these high costs. So look, overall, it is a fairly positive backdrop for commodity markets. Strong demand coming in some emerging key sectors, really resulting in demand really picking up even above trend or long-term trend levels, while at the same time supply issues globally really impacting those markets. So we do expect to see a fairly broad-based rally in commodity markets over the next 12 months and potentially much longer than that. Thank you very much.
Okay, a feeble round of applause for a recorded presentation. You outdo yourselves at times. It's morning tea time. When you hear the bell, please come back with alacrity. If alacrity doesn't want to come, leave them there.